This program is brought to you by Real Estimate. Know the value of your home today with a Real Estimate from realestate.com.au.
Welcome back. Well, it's time for our weekly auction results segment. Across Australia on Saturday, there were about 1,700 auctions, returning a clearance rate of about 57%. Sydney held about 870 auctions with a clearance rate of about 52%. There were a further 1,849 private sales in New South Wales over the weekend. Melbourne held 410 auctions, clearance rate of about 57%. There were an extra 1,361 private sales in Victoria. Brisbane held 72 auctions. Clearance rate was a bit higher there, up to about 67%. There were also 1,051 private sales in Queensland. Adelaide held 70 auctions with an even higher clearance rate of about 86%. There were a further 260 private sales. Canberra held 52 auctions with a clearance rate of about 65%. There were also 112 private sales in the ACT. So let's bring in here Eleanor Creagh, Senior Economist at REA Group. Eleanor, thanks for your time. Clearance rates, how are they going compared to, say, a couple of weeks ago?
We're seeing that clearance rates are easing off a little bit, particularly in Sydney and Melbourne. So Sydney, that clearance rate of around 52%. It's actually the weakest clearance rate we've seen since late 2024, where stock on market had surged throughout the spring selling season, and buyers were really facing a lot more choice than they had been for much of the year. Price growth was slowing a little bit before, of course, price growth reaccelerated as interest rates fell through 2025.
So what's caused the sort of dip in clearance rates this time? Because prices seem to have grown in the month of February. I think nationally they were up about 0.5%.
Yeah, so certainly we saw prices rising again in every capital city market in February. Now, we are expecting, though, that looking ahead, we're probably going to see that price growth does slow throughout 2026 and probably becomes a little bit more uneven. We're looking at potentially another interest rate rise in May. That's going to further constrain borrowing capacities and probably just weigh on the pace of price growth. Although I think we're going to see some bifurcation in market performance based on price point. So we're certainly already seeing that more affordable markets are continuing to outperform. I think that's certainly going to continue to be the case as interest rates move higher. And we're still seeing that those capital cities like Brisbane, Adelaide and Perth, where property is more affordable, certainly in Perth and Adelaide, maybe not so much in Brisbane anymore, but prices are still continuing to grow at a faster pace in those cities and in the more affordable parts of those cities. And supply is the other side of the equation. So we've seen a big uptick in new listings in February in both Sydney and Melbourne. In Perth, Adelaide and Brisbane, stock on market is still incredibly constrained.
We also saw that interest rate rise in February, but prices still lifted. We might get a rate rise next week. I think there's 37% chance right now, according to money markets, for the RBA to raise in March. But it looks like May is going to be when they lift rates. Potentially could get 2 more this year. What sort of, is that going to dampen property demand a bit, or?
So it takes a little bit of time for interest rate rises to kind of trickle through to the end buyer, so to speak. So with that interest rate rise in February, we did still see that prices were lifting in every capital city in February. However, I think looking ahead, with potentially another rate rise on the cards in May, that's over these coming months, that's when we're going to start to see the impact of that additional rate rise in May and February's interest rate rise starting to trickle through. So 125 basis point increase in interest rates typically constrains maximum borrowing capacities by around 2 to 3%. So once we've got those potentially 2 interest rate rises coming through, that's when budgets will start to be, or maximum borrowing capacities and buyer budgets will start to pull back slightly, and that's probably when we'll start to see that impact on the pace of price growth slowing, and maybe in some of the more expensive pockets of Sydney, the more premium price points, maybe we'd start to see a little bit of a flat line or plateauing in price growth. But probably those more affordable markets and regions still continuing to outperform, particularly with those first home buyer incentives in play.
And the building approvals numbers, they came out recently. Are we on track to get to 1.2 million homes in 5 years?
I mean, the short answer is no. Yes, so we got an update on building approvals last week. Some not so good news with a large drop-off in higher density building approvals. So that's multi-storey apartments, really weighing on those building approvals numbers, although we have seen more encouragingly the trend over the past couple of years or so has been improving with respect to building approvals, but still nowhere near where we need to be to hit those federal government targets, 1.2 million homes over the next 5 years, and really to where we need to be to right size housing supply to population growth, because that housing supply story is such an important part of our landscape here in Australia.
Eleanor, Creagh, great to chat to you as always.
Thank you for having me.